The debate between buying or renting a home is a controversial one. Some argue that buying a home now may not be a good idea due to rising interest rates, which have made the cost of buying a home more expensive than before. On the other hand, renting may not be the best option either because of rising rents, which can feel like a waste of money. It may therefore be more beneficial to buy a home and start building equity. As someone who has been working in the real estate industry for several years, I decided to do a thorough analysis of the factors to consider in a buy versus rent situation. My goal is to help viewers make an informed decision about which option to choose. To make the topic more tangible, let's compare the two options with an example. For the buyer's perspective, let's assume a house costs $400,000, which is about average for a house in the US. A comparable house can be rented for about $1,300 per month. Therefore, the analysis will compare the cost of buying a house for $400,000 versus renting it for $1,300 per month. Let's look at the cost of renting versus buying a house and all the factors you need to consider. If you rent this property, the financial cost is pretty straightforward. It's the amount of rent you pay to live there, which in this case is $1,300 per month. However, this is only the starting price and does not take into account inflation over the coming years. Now, assuming you rent the property for 4 years and the average inflation rate over the next 4 years is 3%, the rent will increase with inflation to over $1,460 per month. Therefore, the average inflation-adjusted rent over the 4-year period is approximately $1,380 per month. There are also other factors to consider as well, such as utility bills and property tax, which may or may not be included in the rent or charged separately by the landlord. However, for the sake of simplicity, we will exclude these costs from both scenarios. Let's now look at the cost of buying a home. The average deposit for a house is between 5% to 20% of the purchase price. Typically, first-time buyers tend to be at the lower end of the range. Assuming a 10% deposit on a $400,000 house, this would be $40,000. This is the money you are putting into the equity of the house. The second thing to take into account is the closing costs. These are the one-off fees that you have to pay to complete the transaction, such as property tax. Notary fees are also included, and you will have to pay valuation fees to the mortgage lender to assess the value of the property. On average, these costs can add up to around 5% of the purchase price. Therefore, in this scenario, the initial costs would add up to around $60,000 to buy the house. Assuming an interest rate of 5% on a 4-year fixed mortgage, the monthly payment would be around $1,580. In addition to these costs, you should also factor in the cost of repairs and maintenance, which can be calculated as 1% of the property price per year. Interestingly, in the current market, the total monthly payments for renting this property are lower than the monthly payments for buying it. This is due to rapidly rising interest rates, which have outstripped the increase in rental prices. However, buying a home can be a good investment, as the value of the property is likely to increase over time. When considering whether to buy or rent, it is important to consider the opportunity cost of paying for deposit and other costs instead of investing in other assets. One way to invest your money is to put it into something like the S&P 500, which typically has an average growth rate of 6 to 8% per year. This could potentially result in a greater return on your investment than buying a house and relying on it to appreciate over time. However, there are many factors to consider when making this decision, such as how long you plan to stay in the home, when you plan to sell it, and the state of the housing market in your area. While it's impossible to predict what will happen in the future, you can use a buy versus rent calculator to determine whether buying or renting would be more financially beneficial based on your specific situation. For example, let's say you're considering buying a house for $400,000 with a 10% deposit, 5% interest rate, 5% property costs, and 1% annual maintenance costs. If you were to rent instead and invest your deposit and other costs at a 7% interest rate, assuming a modest 1 to 2% increase in house prices, you might be better off financially after 4 years by renting rather than buying. However, if house prices rise at a rate closer to 3 to 4% per annum over the same period, then buying may be a more profitable option. It's important to remember that the decision to buy or rent depends on your individual circumstances and the timing of the market. To find out what's best for you, it's important to crunch the numbers and speak to a mortgage advisor. There's still uncertainty in the interest rates and house prices, with many people facing a payment shock when their fixed-rate mortgages come to an end. This could lead to more people downsizing or renting, which in turn could lead to more properties coming onto the market and a potential shift in prices. In essence, the decision to buy or rent a property comes down to the balance between supply and demand in the housing market. One of the most important considerations is whether a slight change in prices or a slowdown will offset the rising cost of mortgages due to interest rate rises. When it comes to buying a property, you most likely look at it as a long-term investment. Generally speaking, house prices tend to rise over the long term. There are also psychological factors to consider. When you buy a property, you have the security of not being evicted by a landlord, and you know how much you'll be paying for your mortgage for the next years, depending on the fixed term. You have the freedom to do what you want with your property without having to get permission from a landlord. You can add extensions, make changes to the property, and this generally increases the value of your property, which is not possible if you are renting. On the other hand, the advantage of renting is that you do not have to worry about the cost of repairs and maintenance. If something breaks down, the landlord is responsible for fixing it. However, you will have to pay a deposit when you move in, and the landlord can deduct it if you cause any damage. The flexibility of renting is also an advantage. If you want to move to a bigger place or a new area, renting generally makes it easier to do so, although it may involve higher moving costs. All of these factors need to be considered and weighed up when deciding whether to buy or rent.